Hi there, guys. Welcome to Midweek with Indiacharts. We are finally shooting this.
Yeah, sorry, apologies. So, firstly, that we couldn't record it yesterday. Last week. So we were just about to record, and the PC crashed. Hopefully, this time around that shouldn't be the case, and we should
Yes, please.
be able to, and we should be able to record it smoothly.
Correct. So we will be recording. We will be punctual, and we just missed last week because of some errors. But yeah, we are back at it again, and we have interesting questions for Jay, and we will wait for him to answer the same for us. Before we move into our detailed chart questions, I just want to know the Fed meet is there. Today is the Fed
Right.
meet. What are we expecting?
So while we were supposed to talk on CPI as well last week, so I just want to touch upon that. So last week, what had happened was CPI number had come, and it was just a marginal miss. I think 0.1, 0.2% or something like that.
Correct.
In fact, 0.1, 0.2% or something like that. But market reacted very sharply to that. Now in India, even I think the CPI data was a little haywire, but it did not affect us much. But it affect the US markets much. That was because the core CPI over there, which suggests that the core inflation is still very sticky, and the Fed needs to attack that in order to bring down the inflation, and that somewhat suggested that the Fed is not probably going to hike the rate, end the rate hiking cycle anytime soon. And moreover, people were anticipating that the Fed might start cutting the rates. I think those all things are out of the window as of now. And in fact, after the data was out, many people expected Fed to do a 100 bips hike, which would be the largest ever hike, I think, in many, many, many years. So far, it has gone with 75 bips. So whether we see 75 bips or 100 bips, that needs to be seen. But I think more than the quantum of hike, it is the language which people wants to see. They probably want to see that at some point of time Fed stops hiking the rate. But as of now, if we see the CPI inflation, it is somewhere around 8.1, 8.2, and it is far from the Fed's target of 2%. And right now, to get there, historically, Fed have stopped hiking the rates when the when this Fed fund rates have gone uh, a little over the CPI. Okay, so that is still quite a while. We might take a little bit more time to get there. So that is why now probably market is also anticipating that the Fed will not only hike rates up to 4% or so, but it might keep that for a while. And if that has to happen, then that can cause some bit of turbulence for the market. But moreover, like I mentioned, that the language of the Fed would be very important to see, and that is where we might get some clarity, I feel.
Correct. While you talk about turbulence in the market, the US indices, as we saw, were correcting sharply. There was turbulence in the market, but
Right.
the Indian market was still held. It did not really correct very sharply. What made it so stable? How was it not affected?
So that is actually the $1,000,000 question, because there are all the ingredients for the markets to fall, but it is still not falling.
Correct.
So why is it not falling? I have no clue. But what are the charts telling me? That is something I can surely tell you.
Correct.
So let me quickly share the chart.
Hmm.
So I want to highlight something interesting. So see, this is Dow to Nifty comparison. Okay. Wait, I'll just remove this averages. So this is Dow to Nifty comparison. The upper one is Nifty, the lower one is Dow index. Okay.
Correct.
You would see that most of the time, okay, they would go in the same direction.
Very similar.
The quantum can be more or less, okay, but usually they are in the same direction. So I've tried spotting, some points where, there has been some disconnect. So you can see over here, this was the 2000 high, where the Nifty was actually making higher high, but that was not the case with Dow Jones. Okay, it had peaked a little prior to Nifty. And you can see over here, Dow had gone flat, but the Nifty was correcting sharply. Over here, there has been inverse. So the point I'm trying to make is that usually in the short term, there can be some disconnect. Okay. But in the medium term or in the in the medium term, the trend will dictate. Basically, if supposingly Dow Jones is in a downtrend, then Nifty will also eventually go in a downtrend. Initially, it might look like that, this index is very strong, blah, blah, blah. But eventually,
it reacts later.
Yeah. So the global market, especially, after 2008 and all, has been very interconnected. Okay. So it is not that, some other index can do something different. They might fall less. Okay. But it is not that they will change the trend. And if you see the evidence, so it was right around this 2008 phase as well. See, you can see over here. Okay. This was the point when Dow Jones, kind of peaked, because this high was not much greater than the previous high. But you can see Nifty kept on rallying. Okay. And then eventually we know what happened. And in fact, this was the phase. This was the phase where all the news articles started coming out that has India decoupled? Will India be on its own path? Which is what we are sort of seeing right now. But you can see over here as well that the Nifty bottomed out earlier than Dow Jones. But, until Dow did not complete its fall, it just remained sideways. Okay. So now, in fact, over here as well. In fact, over here it was inverse that, Nifty had peaked out and Dow Jones kept on rallying. So, you may find this sort of disconnects in the short term. Okay. But you would see that eventually, Dow ended over here and it eventually, played that catch-up role. Okay. So that is the whole point. So right now, if we see, okay, right now over here, if we see, so Dow Jones is falling. Okay. But the Indian indices are somewhat consolidating at the highs. Now, given that the India's macros are very strong, that is true. Okay. But will it decouple and will it do its own thing? I really have some doubts, because every time you hear people saying this time it is different, this time it is different, trust me, it is never different.
Yeah.
So that is what, in our couple of previous recordings as well, I am trying to highlight that, let the dust settle over here. At the max, what we might do is that we might continue to chop around something like this. Okay. And not necessarily fall as much as Dow Jones do. But the whole point is that let this settle, because there is right now a serious risk that we might eventually sell off. Now, why do we sell off? When do we sell off? Honestly, I have no clue. I have no clue whatsoever. But right now, there is one trend line that I'm really watching out very closely, and it is this trend line. If you see, this trend line has been holding, and as of now, we are able to take the support of the trend line. Now, the moment this trend line breaks, there are two possibilities. There are two possibilities. Either we go sideways, something like this, and then we eventually break out. Okay. Wait, I'll just remove this. So there are two possibilities. If the trend line is broken, then in the short term, it breaks over here and we continue to consolidate something like this, and then we start moving higher. Okay. In which case, once the trend line breaks, the immediate thing that I think one should start looking out for is the percentage of retracement. So 38.2 would be then the minimum thing that we would expect, and then we would start looking out for 50 and 61.8%. The moment 61.8% is breached, that is where we are calling for trouble, and maybe a bigger correction might come into play. But as of now, this is our view that maybe this high won't be taken out in a hurry. And because we feel that this was an impulse move in the US indices, So all we can think of is that the next equal move on the downside will eventually unfold. Okay, and if it has to unfold, then it is quite far for now. From now, I mean, the bottom I think is somewhere around 20. So it is around somewhere around 27,500. Okay, and we are somewhere around 31,000 right now.
Correct.
So we are still far away from that to calling out a bottom in Dow Jones Index. And in fact, what is happening is that in Dow Jones Index, everything is actually playing out like a textbook pattern. So this was a decline. Okay, you
Yes.
got a perfect 61.8% retracement to this entire fall, and now it has again started to roll over. So now, so whatever technically has to happen, I mean, is happening over here, but somehow it is not getting reflected in India. So that is what is sort of creating some sort of problem, and it is making people feel that it has decoupled. But can it decouple is a real big question, and that is one of the reason I wanted to show you this chart. Now also let's look at few of the other charts. So if you see, I think it was the mid cap index, the BSE mid cap index. So let's look at small cap mid cap and I mean the Nifty mid cap index. So you can see over here there has been continuous green bars. Okay, it is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And this was after 12 bars of continuous up move. You have finally seen some red bar. Now people who follow us and who knows our method do know what is the importance of this color change. So now immediately we would expect that maybe this entire thing was one leg. Okay, and of this entire leg, you might, at least in a conservative basis, you might start expecting a pullback to play out. Okay, once this pullback play out, we will then start assessing how things are going. I mean, are we going to see a very deep correction, or will it be just a minor correction? So that is something we will only get to know when the correction unfolds. As of now, there are all signs of weakness that are creeping in, but is the index confirming yet? It is no, because like I said, if you see the Nifty index, the lower end of the rising trend line is being held. Okay, so somewhat same is the case over here. But interestingly, if you see the small cap index, that has gotten a bit weak. So this is not actually, today's data is not updated, but if I'm not wrong, I think today's low is, I mean, this 20-day moving average, which it was been holding, has been broken, I feel. I suppose. So then then the downside target towards the 40 DEMA will unfold. And once that is broken, we'll start looking out for the retracements. So that is how we would like to approach to the market right now, knowing that there is some sort of significant top that has happened, maybe in the near term. And also, yes, there is one more thing which I want to highlight. In fact, this I just got to know a while back. If you see, this is the USD INR index. This is the USD INR chart, and it is almost on the verge of breaking out of this consolidation. Now, if that happens, the first move straight away will be towards the 8120 mark. And then if people are following our wave counts, this looks more like a bigger third wave kind of move. And that might actually open up a target of 84 or 86 in the medium term. And also, if you see dollar index, see, it saw a sharp move over here, I think, when the CPI data was out. After that, it consolidated for 4-5 days, and now again it is starting its up move. And also, as per the wave counts, we had published that this is probably 1 and 2, and now wave 3 should start. Okay, within that, probably wave 3 is starting. So if I have to go by the equality target, I think the equality level would come somewhere around 114 kind of levels. And also, if people remember this entire bigger channel which we had discussed in our previous interaction as well. So wait, let me reset the scale. So you can see over here, even that points to around 115 or so. So and if the dollar has to rise, then can emerging markets, stay out of this mess? I am not too sure. And also, when I look at the other key emerging indices, you can see Taiwan almost on the verge of breaking its recent low. If you see Hang Seng, that is tanking. I think it is only Brazil index which has done pretty well. But if you see, it has been falling for a while now. Okay. So it had actually topped out lot prior to when other markets topped out. So that is why you're seeing some bit of outperformance over there. But I think it is Brazil index and the Jakarta index which is almost near its top. Okay, these are the two resilient market. Other than that, all are kind of starting to show weakness. And also, if you see the developed markets, okay, so over here as well, it is almost consolidating at the March high. Around the March low levels. Okay, so the thing to watch out for is that what if this triangle breaks on the downside?
Correct.
So that can again create some bit of problem. If you see the Japanese index as well, it has not been able to hold. It is not holding out. So if you see the global market elsewhere, everything is looking subdued. Okay, to say the least. And in that context, Indian markets are unusually very strong. So if the whole point is that can this actually sustain? I'm not too
I don't know
sure.
if I should be excited or worried.
Exactly. So the bulls will think that the Indian markets are very resilient, and this shows that this is outperformance and a structural change and everything. So that part is actually very true, that the Indian macros are looking up and it is very good. But can it withstand the global volatility is a big question. And on the other hand, bears are somewhat on that camp that eventually this will catch up. Now see, in this case, as I showed between Dow Jones and between Dow Jones and US indices, Dow Jones and Nifty indices. So that, see, something is wrong. Okay, either this one is wrong and this will eventually catch up higher, or this one is wrong and this one will correct. So which way does it go is something that we need to see. But as of now, because we see all of this risk, which I highlighted, be it USD INR, be it dollar index, be it downtrend in the global indices. The other thing is Fed hiking rates. So all of this are the risk factor which we foresee right now. And once we see all of these things settling, and we see some bit of good news or the macros also improving along with the price action, that would probably be a much better time to become constructive and start thinking of a next leg of up move. But as of now, because all of these things are pointing out towards the ugly days to come, at least in the near term. In fact, I forgot to mention the bank. I think the in Sweden, there was some 100 basis point which was being taken as a rate hike, and that I think would be the record rate hikes which the central banks are taking. So so across the globe, if you see, we are all in a hiking cycle. So that will provide a headwind to the equity market. And right now what has happened is that the US markets have corrected mainly due to the PE derating. When interest rates are higher, the discounting rate for equities come lower. Now, with the rate hikes actually coming into system, there is a risk of earnings also getting downgraded. In fact, I was reading a day or two back, people have started to revise the EPS on the downside for S&P 500. If that has to happen, then there would be a double whammy wherein the PE has got derated. Okay. But now EPS wise as well, when the downgrades start happening, that can lead to even more derating. So whether does it play out or no, I don't know. But if you see the last 3, 4, 5 days of action in the US indices, FedEx I think tanked more than 20% because of profit warning and weak outlook. Ford also tanked in double digits because there was some supply chain issue that they pointed out. So yes, I mean the corporates seems to be facing some trouble, but somehow that is not being reflected in the equity market, especially in India. And it seems like we are outperforming a lot big time. At least, but the main question is
like outperforming touchwood.
No, but the main thing then to watch out for is, can this sustain? And if we look at the historical data, maybe this thing that is going right now in Nifty is probably too good to be true. But however, like I mentioned, we'll look out for signals. And as in when they turn around, either on the upside or on the downside, we'll keep highlighting to our subscribers.
Correct. I agree. I think next week when we come in, we have a little more clarity as to कौन से direction में जा रहा है, थोड़ा सा कुछ मिल जाए.
So honestly, every week you think that more clarity आएगा, but somehow, but somehow, we are sort of stuck in that range only. So we need some confirmation on the price action to suggest what is happening. But yeah, let's see how the news flow unfolds.
Yes. Looking forward to the same. Looking forward to the Fed's meet today as well. We will discuss about it next week. And yeah, looking forward to how all of these things unfold as well. Thank you so much for today. Thank you.
Thank you.